We are entering into another chapter. It's a continuation of what we have learned in the previous chapters. We were talking about how formation of company take place, and in that formation we have learned about subscription of capital. That means financial resources required for a company. Without the finance, we cannot think of running a company, or without finance, no business will be able to move forward. So, in this chapter, we will be discussing about the finance, business finance, and different sources of business finance. So, we are entering into a new chapter, sources of business finance. Now, we have to understand what is the meaning of business finance. Before that, we have to understand that without finance, no business firm can work. No business firm can work. So, we have to say that finance is the lifeblood of business. Finance is the lifeblood of business, because without finance, nothing is going to happen in the business. No business activity is going to happen. Likewise, without blood, the human being cannot exist. Without business finance, the activities in a business firm is very troublesome to happen. Without finance, nothing is going to happen. So, here we have to understand what is the meaning of business finance. Business finance means the requirement of funds by business to carry out business activity, or the funds which are required for carrying out business activities can be termed as business finance. What are the funds required for carrying out business activity? That funds are called as business finance, and business finance is required for each and every activity inside organization. It can be for purchase of land, can be for purchase of machinery, can be for purchase of raw material, it can be for installing a machine, it can be for calling a repairman, it can be for keeping things on stock, inventory management, anything. It can be for purchasing oil which is required for running a machine, anything. It can be for paying salaries. Such a lot of things are there. So, for all these things we require finance, and these requirements can be of two types, or financial needs of business can be. We have already learned in the previous chapter, the requirements of business finance can be for two basic things. One is fixed capital requirement, and another one is working capital requirement. For your understanding, fixed capital requirement are those amount which is required for investing into fixed assets. For your easy understanding, the money, the capital, the business finance which we requires for purchase or invest into fixed assets, or in other words, we can say the money, the finance which we are using for investing for a long term. For a long term, we can call it by the name fixed capital requirement. It will be giving its benefit out after only a longer period. We can reap the benefit out of that investment after a longer period. We have to purchase a land, it's a fixed capital requirement. We have to purchase a machinery, it's a fixed capital requirement. So, that amount of money, that portion of money which is invested in the fixed assets of a firm, we call it by the name fixed capital requirement. That is one type of financial need of business. Another one is working capital requirement. Working capital requirement is for investment for short term, or in other words, we can say it is investing into current assets, or in other way we can say that it is the amount of money which we are investing for the day-to-day activities of the firm. So, that is what is called working capital requirement. Fixed capital requirement will give us benefit after a longer time, whereas working capital requirement is required for carrying out day-to-day activities. So, these are the two types of requirements of finance in a business firm. Now, we are going to see about the sources of fund. Requirement is fixed capital requirement and working capital requirement. From where we can get it? The sources from where we can raise. It can be classified on three bases. Different bases are there, but for our requirement we are learning about three bases of classification of source of fund. The sources from where we are going to raise the business finance required for fixed capital requirement and working capital requirement. The sources, there are different sources, and it can be classified. It can be classified on various criteria, but we are considering only three criteria. The sources of fund can be classified on the basis of time period basis. It can be classified on the basis of ownership basis. It can be classified on the basis of source of generation basis. So these are the three bases which we can adopt to classify the source of fund from where we are getting. And in period basis, on the basis of period, it can be classified into three. Sources of fund can be classified on three bases, and the first basis is on the basis of time period. On the basis of time period, we can classify it as short term, medium term and long term. Short term sources, long term sources and medium term sources. In short term sources, those are sources where it is less than 1 year. The sources from where we can raise funds for less than 1 year. Within 1 year, we have to give back to that sources on the basis of that short term sources. It can be trade credit, commercial paper, bank loans, etc. All these things are short term sources of finance. Long term sources of finance are required for more than 1 year, or from such kind of sources we raise for more than 5 years, although that will fetch us capital for more than 5 years. Long term loans, equity shares, retained earnings, debentures, such kind of sources are termed as long term sources. So it will be for a period more than 5 years. And in between short term and long term, there is a medium term source. There are some medium term sources. Medium term sources are giving us finance for more than 1 year but less than 5 years. So such kind of sources are called as medium term sources. Loan from banks, public deposits, lease financing, such kind of things are considered as medium term sources. So on the basis of time period, sources of finance can be short term sources, medium term sources and long term sources. Now coming on to the basis of ownership. On the basis of ownership, the sources of fund can be classified into two. One is owner's fund and another one is borrowed fund. What is owner's fund? Fund provided by owners of the enterprise. Fund provided by owners of the enterprise. Basically only two sources are there in owner's fund. One is equity share capital, equity shares, and another one is retained earnings. Equity shares and retained earnings. These are owners fund because it is given by the owners of the company, or those who are contributing into equity shares become owners of the company. And borrowed fund are fund raised through loans and borrowings. Any kind of borrowings, any kind of loans, it contribute to borrowed fund. On the basis of ownership, classification as owners fund and borrowed fund. Those are the sources. And now on the basis of source of generation, on the basis of source of generation, it is internal sources and external sources. Internal sources and external sources. The name itself says internal sources are those sources of fund that are generated from within the business. So, from within the business, when they are getting, for example, retained earnings, equity shares, because it is from within the business, owners is giving, or retained earnings is taken from the profit made by the business. So, it is from within the business they are getting, internal sources. Whereas external sources are those sources which are outside the business, which are from outside the business. Loan from banks, public deposits, debentures, all these things are kind of borrowings, or it is from somebody outside the organization. So, it is classified as internal source. On the source of generation, it is internal and external. So, we have seen what is the meaning of business finance. We have seen what are the kind of requirements of business finance: fixed capital requirement and working capital requirement. And we have seen the classification of sources of funds on three bases. One is on the basis of time period, one is on the basis of ownership, and third one is based on the basis of source of generation.